Everybody, morning. Donald, channel members Kevin, Ivan, Lieutenant Colonel, Goose, Rex, Ed, Svenborn, Will, Logan, Craig, Arturo, Jason, and my regular subscribers such as Diana, Rick, Bradman. Welcome everybody to the show. It is a crypto special since the market is closed. Welcome. Welcome. And what a week, right? Netflix did pretty darn good. At least it was up right around 1,000, maybe 1,020, which was right at the top end of the range for the options prediction that I did right there. Not too shabby. Came up right to the top. Not to divert from the crypto special, but the extended hours, look at that, right to the top, right to the top. Stopped right about 1,006. I guess we'll see how it opens on Monday. I threw out a trade for Turn My Trading Lab people. It was like I think it was a 975, 990. If I remember right. Looks like that one might go out pretty good. Spent like $7 on it with a $8 potential profit. It's out to next Friday. I'll probably close it for like $6 profit. Probably close it around 14 or so. 13, 14. I don't know. We'll see. I guess it depends on how spicy it is on Monday. Not bad though. Not bad at all. And I guess before I talk any trades or anything, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any cryptos or stocks, options, bonds, forex, futures. So, treasuries, don't long them, don't short them, don't trade them. You may lose money. And if you desire personal financial advice, hire and consult a financial advisor. Welcome to the show. Welcome to the show. So we are on Good Friday. The regular market is closed today. Down here at the end. Yeah, what you gonna do, right? What are you gonna do? And next week, coming up, it's a big earnings week next week. Got more bank holidays, but the U.S. is not a bank holiday on Monday. We'll be open. So the IMF meetings start. It's interesting. IMF. Not really any crazy moving. You know, we have flash PMI here. FOMC Waller on Wednesday. Not really anything spectacular here. Kind of cruise through most of the main announcements. We get nothing, and basically nothing all week. So it's the first big week of tech earnings. We got Tesla and Google ramping up earnings this week. So crypto has no real catalyst. That's what my point is in all of this. Is that crypto doesn't really have a big catalyst coming up. And let's see, open browser. I was gonna pop this up and maybe I was gonna pop this up. Let's see if I can pop this up. There we go. So we've got Tesla right there on Tuesday after the close. So that'll be for 30 minutes of awesome. We've got Alphabet, which Intel earnings, I guess earnings whispers saying Intel earnings are more important than Alphabet. I don't know. You tell me. But we also have like T-Mobile in here. That's been an interesting one. ServiceNow has been a hot mover. IBM in here. which they weren't really moving until they started mentioning AI, which I don't know why anybody would think they weren't in AI. They've made the Watson, they've had Watson going for years. So they've been on the AI train for a long time. They just weren't really talking about it. Like they weren't hyping it because it's not really a hype thing. So this will be an interesting ramp up. And then next week, yeah, the week after this, next week, we have lots of big tech like Microsoft, Meta, Apple rolling in. So these are 2 out of the Mag 7s right there. So we'll have 6 out of 7 probably by the first Saturday in May. Crazy to think we're already to May. But this will be next week, and then there's there's May. So by the 3rd, 2 weekends from now, I'll have like 6 of the big tech earnings out of the way. I think, if I did my math right, and that'd be interesting. Netflix coming in with a hot surprise. Of course, virtually unaffected by any kind of tariffs or anything. So, yeah, not really a super surprise to me. I thought we were going to go bullish just based on the chart pattern. So, it's kind of what we got cooking. Market cap, coin market cap. If you've never been here before, it's coin market cap. This is like my place to go look at crypto, at least to get the lay of the land, what we're expecting, what's going on. If you thought there were a lot of cryptos, there's 13.75 million cryptos listed on CoinMarketCap. 812 exchanges. You're like, well, where can I go to just trade all the crypto? There's nowhere. Absolutely nowhere. Market cap of crypto currently at $2.67 trillion. You look at the global economy over here on infinite market cap. We're hanging out at $147 trillion, down substantially from when we topped out in the market, but that's what we got. And 2 trillion is like 2%. Maybe even a little less than 2% of the entire money base market, market cap. And this does include Bitcoin. It does include Ethereum way on down here. So some of the top cryptos are included in here, although Ethereum has dropped way on down here as its market cap is down to $191 billion right now. Billion with a B. So we've got to come on down somewhere right around. Should be hanging out right in here. Yeah, there it is. Ethereum down 3. So that's pretty wild, right? Bitcoin's up at the top and Ethereum's way down 79. So the sites I'm looking at, Coin Market Cap. You just spell it CoinMarketCap, coinmarketcap.com right here. And this was just infinite. It's just 8 market cap. Turn the infinity sign up, 8marketcap.com. That's this one right here. And another interesting one I like to look at when I look at crypto. This is actually the Bitcoin network. And there was a block. You wonder how when they talk about blockchain, here's the chain. This is a chain of blocks of transactions. We just saw one get just now. Foundry USA just mined out that block. And you can see who claims the blocks. Binance Pool, Luxor, Via Bits. You can roll back through here and see who's been mining blocks. Noticeably absent. Don't see a lot of blocks for Mara pool right there. Not seeing a lot of Mara blocks. Anyway, there's one of these every 10 minutes-ish. As you can see, they're not perfectly 10 minutes, and this keeps track of where we're at. 9.8 minutes is the current average. We have a difficulty adjustment in 17 hours. The network automatically adjusts itself, the difficulty of the network up and down, to keep this roughly at 10 minutes. We're actually running ahead of schedule, 39 blocks. So the difficulty is going to ramp up in 17 hours, roughly at 3:06 a.m. whenever we hit that magic block. So it actually adjusts based on block numbers, but it's approximately every so many days. Approximately. That's why it says approximately 17 hours. And then the halving, we're a quarter of the way to the next halving. And this roughly takes 4 years to get to the next halving. So we're looking at roughly April 12th, 2028. But this will adjust as we get there. And if you're wondering what this is, mempool.space right up here. That's the actual site. mempool.space right there. Why do I like to focus on Bitcoin? Because, well, when you look at it, it's 63% of the entire crypto market. The number 2 is 7%. So when you talk about crypto, it's hard to not focus on Bitcoin, because the majority of the market for crypto is Bitcoin. Now you've got all this other stuff. I think when Solana created the easy ability to blast out all these altcoins on the Solana network, we saw an explosion of cryptos and an erosion of trust in that network. At least that's what I saw. A lot of scams and pump and dumps and stuff like that showed up in the Solana network. Maybe some useful stuff, but a lot of crap. A lot of crap. I'm not going to make this a full big update on crypto, but I will kind of run through some of the stuff I'm looking at watching today. And the market's kind of boring. And if you're new to crypto, one of the things to watch out for, one of the big things to me, like you hold your finger over this and you can see 94.5% of all the Bitcoin is on the market. And you're like, well, what happens when we get to the end of mining? It's like 150 years away. It's going to be a long time before that last Bitcoin is fully out there in the market. Now, other stuff like Ethereum here has no cap. Tether has no cap. XRP has a cap, but only 58% of the crypto is out there. What happens if they dump that other 42%? That's inflationary, drives prices down, right? Binance Coin, no cap. Solana, no cap. USDC, it's a stable coin. They're pinned. Tether and USDC are pinned to the dollar, roughly. Dogecoin, no cap. Tron, no cap. ADA, there's a cap, but we have roughly 22% left to dump on the market. That's inflationary. Inflationary makes prices go down. When there's no cap, those are inflationary, just like US dollars. The more they create on the market, the more it can drive prices down. I've been a big critic of Ethereum. They went through a deflationary period where they were burning more off the network, but then they were a victim of their own idea. They were like, oh, there's so many miners on the network. When they were proof of work, there's so many miners on the network. They're causing transactions to cost a lot. So we're going to go to proof of stake and remove that motivation for miners to participate in the network and reduce the prices. Well, when they got rid of the miners, the majority of their network was miners, and now they're suffering from a use case, kind of lack of use case. And they dropped off from being upwards of 20% of the market cap down to 7%. That's been a pretty big erosion of value. And they went from, well, when they first switched over to being proof of stake instead of proof of work, which means to verify the network transactions, you just have to hold Ethereum. Anything in the world that I know of, you work for it to, you work for anything you get. Well, Ethereum gave up on that idea and went to proof of stake, where you just hold some Ethereum to verify the network. And at first, they were burning more than they were creating, but then the use of that network dropped off, and it has created an inflationary network where there's more being created than being burned as the use of the networks declined. Now, you can debate fundamental differences in what you can do with Bitcoin versus what you can do with Ethereum and this, that, and the other, but you go out there, ask 100 random people on the street, ask 10 friends that aren't really in the markets, have they heard of crypto? You'll get like somewhere in the neighborhood of 70% of people in the United States anyway have heard of crypto, or will admit they've heard of crypto. They may be like, well, maybe, And then if they've heard of crypto, Bitcoin is likely the only thing they know. Like, they may have and probably never have heard of Ethereum. It represents this up here. The dominance of Bitcoin and Ethereum. You'd be like, well, XRP has this giant opportunity, but you got to get people to know what the fudge it is. Just being number 4 doesn't, Tether, most people have no clue what Tether is, even though it's number 3. A lot of, very, very few people know what XRP is. And, I was talking to somebody the other day, they were like, XRP, what the devil's XRP? I was like, Ripple. And they're like, oh, I heard of Ripple in that news story with the SEC. So they've got kind of an advertising problem. And that's run by a company. This is run by the people on the network, Bitcoin. Bitcoin's run by the network. Like, you download the Bitcoin software, you have a say-so in how Bitcoin works. This one, if they want to make changes to it, it's a very small board of people, mostly run by Mr. Van Buren. This one, managed by a foundation. This one, managed by a company. This one, managed by a company. This one was a joke. Just happened to be a long-lasting joke. There's lots of joke cryptos. Absolute jokes. This one was supposedly they built FedNow. Although Powell denies ever creating FedNow, this one supposedly read FedNow. And then when Trump came in office, this one got absolute whacked. And it went down big. Stellar Lumens has done thousands of % gain every halving event. We haven't seen that big halving run yet, although it's gone way up off the lows. Bitcoin Cash was a fork off of Bitcoin several years back. That was every time they want to make a big foundational change in the Bitcoin network, a new coin is basically created. The main Bitcoin, when you change the code, the main Bitcoin, they call it a fork, hard fork. Main Bitcoin goes on, and the people that want to believe in main Bitcoin goes on, but everybody that was running it before, you have original Bitcoin and the new, and this new is a copy of this network, but it stays the same. It doesn't adopt the new changes. It just stays the same. So that creates a fork in the road, if you will, where the new coin, they're both essentially new coins, but this is the old code and this is the new code. The new code goes on as the main Bitcoin chain, and you have this fork out here that can become worth money. At the point of the fork, they're exactly the same. As soon as one transaction happens on either network, they're separate. Now, everybody that had a wallet on Bitcoin at the time of the fork has a wallet on the new on both networks at that point. So it gets really confusing really fast. So Bitcoin's network has kind of chilled out with the big forks. We haven't really seen a big one in a while. And this is an interesting site right here, BitInfo Charts. You can actually pull up Bitcoin, and Bitcoin, Ethereum, XRP. So you can actually look at things like when's the last GitHub release. It's actually on GitHub. You can go look at the code for Bitcoin. It's public. Version 29.0, released this week, yesterday, 3 days ago, back. Tax day Tuesday, the 15th. GitHub stars, GitHub commits. Their last commit was yesterday. Yeah. So somebody's actively working on the code, trying to improve things. Blockchain size, if you wanted to download the entirety of all the transactions ever occurred on Bitcoin, right now, it's almost 500 gigabytes. You have to download that and verify it all, verify every transaction before you can participate in the network. It's just that's the way it works. If you want to see how mining's working, what's the profitability? If you're a miner, you gotta be in the terahash zone. The hash rate right here. We actually crossed zeta hashes for the first time right at the beginning of April. Dropped back down. It took us a long time to go from from 1 exahash to 1,000 exahashes, which is a zeta hash right there. And you may be like, what the heck? And think about it this way. You've heard of millions, that's mega. Heard of billions, that's giga. Trillions, so this goes up, and zeta is way on up there. We'd have to zoom out. All-time history, you can see we've gone from, here's megahashes, gigahashes, terahashes, petahashes, exahashes, and now we just hit zeta hashes. So that's millions, billions, trillions, quadrillions, quintillions, septillions. And that's the number of calculations per second that are occurring to try to verify one of these blocks. These blocks are just a guessing game right here. Everybody out there that's mining tries to verify the next block. All right, there's transactions waiting, and if you want to see it, there's another block just happened on Ant Pool. So all these transactions are out here waiting. 3,000, 500,000, and you can pay money to be higher up. If you pay more money, you're willing to pay money, then the miners are willing to put your transaction in here to try to get your money to verify your transaction. And they're sitting here trying to verify the transactions and match a hash number, which when we look down here, it'll show you the hash number somewhere in here. Well, they changed the way this all is laid out. It's interesting. There's the hash number right there. So this hash number represents that block. And when we talk about trying to mine a block, here's what the hash number, this is what you're actually doing, is calculating this hash number. And the difficulty is how many zeros are in the front of this hash number. So it doesn't matter what the rest of these numbers are. The first one to guess a hash number with that many zeros is the one that works. It's a SHA-256 algorithm. It's very difficult to guess a hash number, and it's guessing a number that hashes against all these transactions. So it's a complicated thing. You're guessing a number that hashes against all these transactions to verify this block. And the way mining works, they start out with an empty block and start guessing a hash number that can hash against it to verify the transactions. And sometimes somebody gets lucky and they guess an empty block that has no transactions in it. And that occurs every once in a while, but you'll see 2 blocks mined very quickly, like seconds apart. It's just because somebody got absolute lucky, guessed the lucky number. And rolling back through here, I don't even see a lucky block like that for a while. It's very rare you see one. Usually, but I've seen it happen once or twice a day, here and there. So lots of complicated stuff, right? And then every network runs different. Like this is how Bitcoin works, but other networks run different. Like Ethereum is just proof of stake. So it has nothing to do with the transactions. You just have to hold Ethereum to verify the transactions. And then you get paid a piece of the transactions. So it's all complicated and interesting, right? Complicated but interesting. So diving back in, people always want to know, what about XYZ crypto? It's been my thought for a number of years that as this explodes, the value of 99.99999% of these is going to approach 0.0000. So most of these right up here are going to go to 0 because there's just no utility for all that. Like, what's the utility on Fartcoin? I mean, really? Other than it's just a big joke and kids will buy it, there's no real utility here. None at all. And for those of you that are really confused about why can't I just go to one exchange and be able to buy any coin? These are companies that run exchanges. There's no centralized anything in crypto. It's all decentralized. It's all, Wild West. Somebody has to decide to set up an exchange. You can see the volumes on these. There's the top 3, 4, 5. Now, they only support, they, being Binance, only supports 1,900 markets. And in those 1,900 markets, there's only 476 coins represented. Markets are like Bitcoin and US dollar. That would be a market. That's commonly when we talk about the price of Bitcoin, we usually talk about it in US dollars. But there's also Bitcoin and that little funny euro thing. That's a pair. So those are 2 different markets for Bitcoin, independent of each other. So when they talk about markets, that would be 2 different markets out of there. They support fiat currency supported, euros, Great British pounds, BRLs, and 8 more. So they support 8 different currencies. You notice, notably absent US dollars on Binance. And then Bybit supports US dollars, and Coinbase supports US dollars. So a lot of people like Coinbase, but they're only 295 coins are listed on Coinbase. And you can look on down here and see all different ones. 409 on crypto.com. I use them. I use Coinbase. I use something called Zero Hash that runs through Tasty Trade. I was using NiceX, but I think they decided not to be an exchange anymore. They kind of made everybody take their crypto off and do something else with it. So that's kind of like, it's difficult to keep up with because there's a lot of moving parts. There's no one-stop shop. If this is not something you want to keep up with, don't trade crypto. Or stick to the one main one, Bitcoin. And 63% of the whole market. So, anybody thoroughly confused yet? I've covered a lot of ground already. Just breaking down the basics of crypto. So here's the total market cap, and you're like, well, why is this number different on TradingView than what you see on CoinMarketCap? Right? $2.67 trillion right here. But then you come over to TradingView, and they're saying 2.63. Well, TradingView doesn't list 13 million cryptos. All right. They list substantially less number of cryptos. I think they list about 1,200 top cryptos and keep track of their charts. Maybe a little more. But that right there represents the market cap of the cryptos they keep track of. So there's about $40 billion value worth of crypto that TradingView doesn't keep up with. For whatever reason. I'm sure it's just a lot of data to try to collect and keep track of. It's probably way down in the cryptos, there's not a lot of liquidity and not a lot of ability to track those cryptos. If you don't have one of the top exchanges that you're partners with managing it, and you want to talk about every exchange stands alone, when you type in BTC USD, Bitcoin dollar, you can go look at the price at Bitstamp, Coinbase, Capital.com, and several other places here. And all of these stand alone. Like there's no centralized price reconciliation. Like we're all used to trading stocks where at the end of the day, price is reconciled. There's centralized exchanges like the New York Stock Exchange, the NASDAQ, Amex, OTCBB. Those entities are responsible for reconciling the price between all the different places you can trade. In crypto, that doesn't exist. There's nothing out there. So when you talk about the price of Bitcoin, you got to talk about the price of Bitcoin at Coinbase or talk about it at crypto.com or talk about it at TradingView or talk about it at Bitstamp. So when you say, well, I see the price of Bitcoin at 84.5, and then somebody else says, well, I didn't see it hit, 84.5. Maybe they're at Binance and it's slightly different, or maybe they're at a lesser broker where the price is a few dollars difference. There is arbitrage that happens that tries to keep it all in check, but sometimes some of these get way out of whack, and that one's $70 off right there. And you wonder about. I dig into some of this stuff occasionally, just look at it. Look at the markets available for Bitcoin. Like, where can you trade it? They're all down here. That's Bitcoin yield, NFTs. Markets are down here somewhere. They keep changing the layout on this. I have to keep up every time. We got markets right there. You can look at you can look at the spot, and we come down here and look at the prices. They're all over the place. Like that one's at 86. Here's 84.5, 84.5, 84.4, 84.5, 86.4, 84.5, 84.4. It's kind of wild, right? Like there's a 86.3. There's like almost a $2,000 difference between some of the different brokers, and that represents an arbitrage potential opportunity if you have the ability to do that across different brokers. Now, some of these that have crazy prices may also be illiquid and not have the liquidity. That's why when they talk about the 2% depth here, $27 million. on the upper end of the book and $25 million on the lower end of the book, versus Bybit has only got $16 million. Coinbase, more liquid on the dollar Bitcoin pair, $32 million worth of Bitcoin offered up on the upside, 28 million offered up on the downside. That's 2% up and 2% down from current price. How much Bitcoin is on the network ready to be transacted? Then you go to someplace like Upbit, and there's only $200,000. Like, that's like not even one Bitcoin of liquidity going 2% down. So you know, if you were, and that's a Bitcoin KRW pair, but if you were able to go over there, you could push Bitcoin around potentially on Upbit. If you had several Bitcoin you wanted to push, just like in the S&P 500, when one of the big boys wants to push price around, they go dump some big transactions. So you can go skew these smaller exchanges, smaller pairs, because they're all independent and they're arbitraged. So that's a big difference between the stock market and crypto market. It's very similar to the Forex market. For people that understand and know Forex, there's no centralized exchange for Forex either. All the Forex brokers kind of stand alone. Cheese stands alone. So right now, when we're looking at the Bitcoin charts, we're consolidating above this downtrend of highs, but below the significant resistance of the roadmap line right here. If you're new to the channel, the roadmap line, you can click the button right under me here, my channel, my logo for the channel. If you're on any kind of desktop, or see that. If you're on a phone or a tablet and you can't see that, flip the screen, you can see my logo. Click on that, go to the homepage. The channel has a video pinned to it that'll play that explains the roadmap line in TradingView, and you can take that code, take the EMAs that are involved in this, and you can put it on any platform. It may not look like this nice clean orange line, but you can put it on any platform because they all support putting EMAs on there. So it's relatively simple. Why the EMAs I use? Because they work. See how this has been resistance since we broke down below it. Back over here. Tried to break up. Nope. Rejected. Tried to go up. Nope. Rejected. Tried to go up. And we're just sitting here. So we're at another inflection point in Bitcoin's price. Now, looking at this, we're not really doing the same thing on the total market cap. We're just kind of drifting through, but we're way far away from the roadmap line here on the total value, the total market cap. Now this is a unique ticker right here. You can type in, it's TOTAL. It's the total market cap of crypto according to TradingView. Now they also have total 2, which excludes Bitcoin. Crypto's total market cap excluding Bitcoin. So we take out the value of Bitcoin. That's calculated by TradingView. Run the downtrend. We're not even pushing through. So what does that tell you? It tells you that Bitcoin is the driver for pushing that price on higher in the crypto market. That's 63% almost of value in crypto run by Bitcoin has an importance, because without it, the market cap of these coins is still in a pretty severe downtrend. And that's a lot of that is influenced by the 7% run by Ethereum. So when we go to total 3 and take out Ethereum, we get a slightly different chart. But it's still a downtrend, not pushing through the downtrend of highs, not pushing through the roadmap line. Notably absent, we are not in that area. So even though we take out Ethereum, it's still pretty rough. Now, if we take out the top 10, we get something a little more consistent on the downtrend here. And we're not even attempting the breakup. So I'm very concerned about the crypto markets right now. Very concerned. Now, one of the interesting things, I think, or I see, that I feel like is interesting, you have this big move down right here. You have this big move down right here. And they're basically echoes of each other. And take out some of the other stuff here. It might be confusing. Got that move down from that high to this low right there. And when we take and copy that, it's just that Control C, Control V, put it on that high. We bottomed out essentially right in the same place on this others chart. I find this interesting because we may see another expansion that takes us back up to $500 million for the market cap, excluding the top 10 cryptos. Maybe like, well, what are the top 10 cryptos? Here they are: Bitcoin, Ethereum, Tether, XRP, Binance, Solana, USDC, Dogecoin, Tron, and ADA. That's the top 10. There's a big drop off from 10 to 11, as you can see right here. $21 billion, $8 billion. So maybe there's a good sign that we're potentially bottoming here. Higher low. Got an echo potentially in the market cap. This is, no one crypto in particular. This is all the cryptos that aren't in the top 10. So top 10, cryptos excluding the top 10 potentially bottoming out. But until we actually break through the downtrend and break through the downtrend and break through the roadmap line, we're still in a downtrend. This can still go lower. So Bitcoin doesn't have that pattern though. When you look at this, like, not quite the same pattern at all. We did get a retrace from that high down to this low. When we bring that over here, we got a very similar pullback. We stopped just a little shy of getting there. Now, if you've watched me at all, I've been kind of watching to make sure, like, this is a kind of a warning zone right here. I want to stay above that breakout. It's possible we dip down into it just a little bit, but I don't really want to see much overlap there. It's like a danger zone. If we get in there, tips the odds we're going on down to around 50,000 on Bitcoin. As long as we can maintain this breakout level, this March high up here, there's the potential we can get extensions on up. Ethereum, on the other hand, is a much more sinister, I would say sinister looking chart. And I'm going to pop over here and pull this up where it's a little bit cleaner. So we've had this was the high so far on Ethereum. That was the highest high right back here. This is when it was still proof of work. They changed it to proof of stake right around September of 22. Right in here. It bottomed out before we did that, rallied into that excitement, and then promptly retraced, made a higher low. And then during this crypto rally on Bitcoin, we have not been able to break out and make the higher highs up here like Bitcoin has. Instead, we're down here messing around. I'm very cautious that this is a limit right here, this low that we made right back here, that if we step across that, we're going down to make a new low. Somewhere down here. A lot of people don't want to see that, but we came up in a reversal zone pretty definitively. And if, like I was talking about on Bitcoin, if we do like this market echo thing, where we did this first move down and we echo it off of this, which triple top, we might push it down. And it could be pretty vicious. Look, on a non-logs mode, we could do it down to 100. On the log mode, might be a little nicer. Might just be looking at a move like this, down to 700. A little nicer, not necessarily the best. So, it was a fundamental change when they went from proof of work to proof of stake. They kicked out all of them, basically tons and tons of market participants, people, it's just a glaring oversight of what you are, thinking that you're something you're not. You kick out 90% of the participants in your network, and you're destined for a correction. It's kind of like trying to kick out 90% of the investors in Apple. What do you think is going to happen? I was a miner. I mined right up till the last day on Ethereum. I used to make $5 a day on marginal equipment. It wouldn't top in GPUs or anything. I used to make $5 a day. I would take my payment in Bitcoin, not in Ethereum. I would rent my equipment right up to the day. I'm very keenly aware of where we switched, because that was the day that the crypto mining got a lot harder. There's not been anything that replaced this excitement here. COSPA kind of did. ASUSD. This did a little bit, but it's experiencing a pullback right now. And the difficulty got a lot harder really fast on COSPA. So we're seeing this potentially going to pull back before we can get the next move up on COSPA. The mining just is easy to do. Now, there's lots of arguments, what about this? What about that? There's 13 million cryptos we could sit here and what about all day. There's only really one that matters, because it's 63% of the whole market cap. Unseating that is going to be difficult. Unseating number 2 is not going to be difficult. It's not far for Tether. Only $50 billion. Takes this, $48 billion at the current moment. $48 billion puts Tether in number 2. It's only $71 billion puts XRP in number 2. But that would still just represent like 7% of crypto. Have to make a giant inroad to go compete with Bitcoin. And think about it, back to what I started out with. Go talk to people. Who's heard of XRP? Almost nobody. Who's heard of Tether? Almost nobody. Who's heard of Ethereum? Almost nobody. Who's heard of Binance Coin? Most people have no idea what I say when I say Binance Coin. Who's heard of Solana? Not many people. Once you step outside of traders, specifically traders that know crypto, there's not much awareness of this stuff. It takes public awareness to be number 1. That's why there's such it's almost 10 times less, 10 times more to go from number 2 to number 1. Almost 10 times. So be careful out there. I don't really have a giant outsized expectation on crypto. It's been kind of boring. It's been boring for a couple months. We're working on a potential breakout. I'm optimistic. I give updates on Bitcoin and Ethereum every single morning. But right now, very cautious until we can actually break out. And I want to see it break out above these highs that we made in late March to kind of confirm. We got to get through the roadmap line. We got to get through those highs. And then we got to keep going. Like any back test, it's got to hold. And we got to go up. This is kind of the road I thought we might see back here in early April. But nope, we didn't do that. We went on down, made a lower low right near the limit. We got darn near the limit. And Ethereum went ahead and stepped across the limit that I had. I had drawn this limit all the way over here, from this low over here, and we went ahead and stepped across. Just barely, but we stepped across. Stuck a toe across. It's the first warning shot. We come back below that line, probably going down. Not going to be good. Not for Ethereum anyway. It may never come back from that. You know, lots of people are like, what about Doge? Same kind of situation here. That high, different narrative, same pattern as Ethereum. Not quite as far down, but this could also first move down, second move down. This may be the Bitcoin halving that we don't see altcoins move. For as long as I've been talking about crypto, I said we're going to see an altcoin shakeout where all these extra coins, these 13 million coins, are going to suddenly experience large drops towards zero. Just everybody should be careful out there. I don't think that there's other coins that are going to, I mean, maybe one day, possibly, we could see something rise up and take on Bitcoin. But right now, that's just not the reality of the network and not the reality of public awareness. And still, when you go worldwide, there's probably only, you know, when you look at the roughly 7 or 8 billion people on this planet, there's probably only 30%, maybe, that would know, that would have any awareness of Bitcoin. And it might be more like 15%. There's still a large potential to grow, but a lot of those people don't even have internet. So there's a lot of things that have to happen before there's big public awareness. And I think that's the big difference between the top of the list up here, gold, at a $22 trillion market cap. You know, this has recently added $2 trillion. You know, it's added the whole entire value of Bitcoin to it in the last few weeks. While Bitcoin's dropped from $2 trillion down to 1.6. You got to be careful out there. You know, this can grow, but you know, this, almost everybody in the world knows about gold. If you don't know about gold, somebody shows it to you one time, you're hooked. Something about that shiny metal that gets people excited. There are no Bitcoins to touch. So it's all about public awareness. And the value, you know, people say it's a Ponzi. The value of anything is just what other people are willing to give you for it. Like, if all of a sudden we found an unlimited supply of gold, it would be worth nothing. You can say, oh, no, well, no, it would never be worth nothing. If the supply of gold was suddenly unlimited, you could get as much as you wanted. The value of gold would go down to nothing. So it's all in scarcity and what somebody else is willing to pay. As long as somebody else is willing to pay more for Bitcoin, it has value. As soon as somebody's not willing to pay any more for Bitcoin, it has no value. That's the same with every single thing on this list. Silver, Apple stock, Microsoft stock, Nvidia stock. You can say it's all a Ponzi. Greater fool theory. Whatever you want to say. That's the way the entirety of things having value works. It's only what somebody else is willing to pay for it. All right. I'm going to wrap it up here. Been going an hour. And we'll see you again on Monday. Same bat time, same bat channel, 9:15. We'll pop it up. Look for the things that are moving. Try to find some opportunities. Have a great day. We'll see you on Monday.